Warren Buffett? You've probably heard his name. He's not just some rich guy, he's literally one of the most successful investors in the entire history of the world. He's known as the Oracle of Omaha for a reason. He started with basically nothing and built an empire worth billions and billions of dollars. But what if I told you that his secrets to success aren't that secret at all? He's been sharing his wisdom for decades, and it's surprisingly simple. Today, we're going to break it all down. I've spent the last week digging through every interview, every shareholder letter, and every book written about him to find his most powerful principles. And I've boiled it all down to 7 golden rules. These aren't just for Wall Street geniuses or billionaires, these are rules that literally anyone, and I mean anyone, you, me, your neighbor, can use to build real lasting wealth and completely change their financial future. This isn't about getting rich quick, it's about getting rich smart. So, get ready, because in this video, we're going on a deep dive into the mind of a legend. We're going to unpack each of these 7 rules one by one, and show you exactly how you can apply them to your own life, starting right now. And trust me, you're going to want to stick around for the last rule because it's the most important one he has ever shared. Let's do this. Okay, first up is a rule that sounds so simple but almost nobody actually does it. Live below your means. You'd think a guy worth over $100 billion would live in a crazy futuristic mansion and drive a different Lamborghini for every day of the week, right? Wrong. Warren Buffett still lives in the same house he bought in Omaha, Nebraska, way back in 1958 for just over $31,000. He doesn't own a yacht, he buys breakfast from McDonald's, and he drives a modest car. It's insane when you think about it. The point he's making is powerful. Every single dollar you spend on something you don't truly need is a dollar you can't invest. It's a dollar that can't go to work for you and make more money while you sleep. Most people get a raise and immediately upgrade their lifestyle, nicer car, bigger house, more expensive vacations. Buffett does the opposite. He sees every dollar saved not as a sacrifice, but as a seed. A seed he can plant in his investment portfolio to grow into a giant money tree later on. It's about fighting the urge for instant gratification. So how do you do this? It's about being intentional, track your spending, make a budget, cut out the subscriptions you don't use and the daily coffees that add up to hundreds of dollars a month. This isn't about being cheap, it's about being strategic. It's about understanding that true wealth isn't about how much you spend but how much you keep and put to work. This first rule is the foundation for everything else we're about to talk about. Without this, none of the other rules matter. Alright, rule number 2 is my personal favorite because it's something I believe in so much. Warren Buffett has said, the most important investment you can make is in yourself. Think about that for a second. Before you even think about investing in stocks, crypto, or real estate, you have to invest in your own skills and knowledge. Your ability to earn money is your single greatest asset, and the more you learn, the more you can earn. It's the one investment that can't be taxed and that no one can ever take away from you. Buffett is a learning machine. He famously spends up to 80% of his day just reading and thinking. He's not scrolling through social media, he's reading annual reports, books, and newspapers. He's constantly trying to get smarter. He believes that knowledge builds up, just like compound interest. The more you learn, the more connections you can make, and the better decisions you'll be able to make in every area of your life, especially with your money. This is the ultimate cheat code. So, what does this mean for you? It means taking that online course, reading that book on a topic you're curious about, or learning a new high-value skill like coding, digital marketing, or public speaking. Buffett himself took a Dale Carnegie public speaking course when he was young because he was terrified of it, and he credits it as one of the best decisions of his life. Investing in your education and skills will pay you back more than any stock ever could. Don't just work for your money, make your mind work for you. This next rule is where most people get investing completely wrong. Rule number 3 is to focus on long-term value, not short-term gains. In today's world, everyone wants everything instantly. They want to buy a meme stock and be a millionaire by next Friday. That is not investing, that is gambling. And Warren Buffett is not a gambler. He famously said, "Our favorite holding period is forever." He's not trying to time the market or chase the latest hot trend. He's trying to buy into incredible businesses that he believes will be successful for decades. Think of it like planting a tree, not picking a flower. When you buy a stock, you're not just buying a ticker symbol on a screen. You are buying a small piece of an actual business. You become a part owner. So the real question isn't will this stock go up next week? The question should be, is this a fantastic company that will be making more money and be more valuable 10, 20, or even 50 years from now? That's a completely different mindset. It forces you to ignore the daily noise and the crazy market swings. Buffett bought his first shares in Coca-Cola back in 1988 after a market crash. People thought he was crazy, but he saw a company with a powerful brand, a global reach, and a product people loved. He wasn't worried about what the stock would do the next day. He held on, and that investment has made him billions. This strategy requires patience, which we'll get to later, but it's the key to building unimaginable wealth. Don't be a trader, be an owner. Okay, this next one is a huge one, and it's the reason so many people are trapped and can't get ahead financially. Rule number 4 is to avoid debt, especially high-interest consumer debt. Warren Buffett is incredibly wary of borrowing money. He once said, "If you're smart, you're going to make a lot of money without borrowing. It's insane to risk what you have and need for something you don't really need." He's talking about credit card debt, car loans, and personal loans used to fund a lifestyle you can't afford. Think about it this way, when you invest, you're trying to earn compound interest. But when you have credit card debt at 20% or more, you have compound interest working against you, and it's working 24/7. It's like trying to swim upstream in a raging river. You might make some progress, but the current is constantly pulling you back and it's exhausting. You can't get ahead financially if you're paying a huge chunk of your income to banks in the form of interest. It's a guaranteed way to lose the money game. Now Buffett understands there's a difference between good debt and bad debt. A mortgage on a reasonably priced home or a loan to start a business can be a smart move. But the debt that people use to buy things that go down in value, like fancy clothes, new tech, or expensive cars, is what he calls a wealth killer. He believes in saving up and paying for things with cash. Getting out of debt and staying out of debt is one of the most liberating things you can do for your financial future. It frees up your money to actually work for you. Now we come to the superpower that separates the successful from the unsuccessful. Rule number 5 is to be incredibly patient. In a world of instant downloads and next-day delivery, patience has become a rare and valuable skill. Warren Buffett describes the stock market as a device for transferring money from the impatient to the patient. He's not trying to hit a home run every single day, he's willing to wait, and wait, and wait some more for the perfect opportunity to come along. He compares investing to being a baseball batter, but with a crucial difference. In investing, there are no called strikes. You can stand at the plate all day, and the pitcher can throw thousands of pitches, bad stocks, overvalued companies, crazy market trends. You don't have to swing at any of them. You can just stand there and wait for that one perfect pitch, that one amazing investment opportunity that you understand completely to come right down the middle of the plate. And only then do you swing, and you swing hard. This is so hard for people to do. They get bored, they see other people making money on some new exciting thing, and they get FOMO, the fear of missing out, so they swing at bad pitches and end up striking out. Buffett's success comes from his discipline to do nothing for long periods of time. He once said, "The stock market is a no-called strike game. You don't have to swing at everything, you can wait for your pitch." True wealth creation is a marathon, not a sprint, and patience is your fuel. This next rule is so simple, yet it's the cause of so many massive financial losses. Rule number 6 is to understand what you invest in. Buffett has a concept he calls his circle of competence. It's basically a list of all the industries and businesses that he truly understands inside and out. If a potential investment falls outside of that circle, he doesn't touch it, no matter how popular it is, no matter how much money other people are making from it. If he doesn't get it, he passes. Think about the dot-com bubble in the late 90s. Everyone was going crazy for tech stocks. People were quitting their jobs to day trade companies that had no profits and no real business plan. Buffett was famously criticized for sitting on the sidelines. People said he was old and out of touch, but he admitted he just didn't understand the valuations of these new internet companies. When the bubble burst and trillions of dollars were wiped out, his portfolio was safe. He stuck to what he knew. Businesses like insurance, railways, and consumer goods. This is a lesson in humility and discipline. It's easy to feel like you need to have an opinion on everything. Crypto, AI stocks, biotech. But Buffett's rule is a powerful reminder that it's okay to say, "I don't know." You don't need to be an expert in everything. You just need to be a true expert in a few things. Before you put a single dollar into a company, you should be able to explain what it does, how it makes money, and why it has a competitive advantage, as if you were explaining it to a 10-year-old. If you can't, you shouldn't be investing. We've finally arrived at the last rule, and it's the most famous and most important rule of all. It's so important, it's actually 2 rules. Rule number 7 is, rule number 1, never lose money. Rule number 2, never forget rule number 1. Now, at first this sounds impossible. Every investor loses money sometimes, right? The market goes down. But that's not what he means. He's not talking about short-term paper losses when a stock price temporarily drops. He's talking about a permanent loss of capital. He's talking about making a bad investment that never recovers. This rule is the ultimate guiding principle that governs all his other decisions. It's why he lives below his means, so he doesn't have to sell his investments at a bad time to cover expenses. It's why he avoids debt, because leverage can turn a small loss into a catastrophic one. It's why he's patient and waits for the perfect pitch, to minimize the chance of making a mistake. It's why he stays within his circle of competence, because investing in what you don't understand is the fastest way to lose everything. It's all about defense. Think about the math. If you lose 50% of your money, you don't just need to make 50% back to get even. You need to make a 100% return just to get back to where you started. That is an incredibly difficult hole to climb out of. So Buffett's entire philosophy is built around avoiding those big mistakes. He focuses more on not losing than he does on winning big. By obsessively focusing on protecting his capital, the winning takes care of itself through the power of compounding over time. It's a mindset of preservation first and growth second. So there you have it, Warren Buffett's 7 golden rules for success. Live below your means, invest in yourself, focus on long-term value, avoid debt, be patient, understand what you invest in, and above all, never lose money. As you can see, there's no magic formula or complicated algorithm. His entire philosophy is built on a foundation of common sense, discipline, and a long-term perspective. These are timeless principles that have worked for him for over 70 years, and they can absolutely work for you too. Achieving financial success isn't a privilege reserved for the lucky few. It's the result of making smart decisions consistently over a long period of time. By following these 7 rules, you're not just investing your money, you're building a framework for a better financial life. You're creating a system that protects you from major mistakes while allowing your wealth to grow steadily and surely. It's a roadmap to financial freedom, laid out by one of the greatest to ever do it. The most important thing you can do right now is to start. Don't wait for the perfect time. Pick one of these rules, just one, and start applying it today. Maybe it's canceling a subscription you don't need or buying a book to learn a new skill. Small steps taken consistently lead to massive results over time. Your future self will thank you for it. Thank you so much for watching, and if you got any value from this video, make sure to hit that subscribe button because we have so much more coming. And don't forget, leave a comment below sharing which rule you're going to start with, and let us know your thoughts or questions. Share this video with friends who could use these tips, and subscribe with notifications on so you never miss a new posting. See you in the next one.